Good afternoon and welcome to the Watch List. I'm Nicole Petalides. We are live at the NASDAQ market site. It's 1 p.m. Eastern time and we're right in the heart of New York City in Times Square. Well, we're taking a look at the markets, which have come under pressure with 3 hours left in the trading day. All three indices have been in the red. The Dow down on the day by over 0.8% right now, had been down 471 points. Looking at both the other indices as well, the NASDAQ 100 getting hit hardest as it falls over 1%. The S&P 500, that is nearly down by about 1%. Our top story, well, a Trump tariff tiff. The president announces via Twitter that he would raise tariffs on 6,000 Chinese goods from 10% to 25%. The meeting scheduled this week between President Trump and China's lead trade negotiator may be in jeopardy now, sending markets around the world into some turmoil. To discuss China jobs and the Fed, we'll be joined here now by Ed Stringham, the president of American Institute for Economic Research. Ed, it's great to see you.
Thanks, Nicole.
We have markets under pressure. I said that the Dow had been down over about 471 points, broke through the 50-day moving average briefly. Stocks have come up off the lows, but this China story is front and center and pressuring markets. What do you make of it?
Sure, this is a perennial worry, especially the last couple of years, of taxes, basically tariffs on American corporations. Yeah. Oftentimes we portray this as we're going after China, but it's actually American corporations and American consumers who are paying these taxes, these tariffs, and that's what's harming markets. That's why they're so nervous.
Right. Can you, I mean, what are some, obviously Caterpillar is the big loser in the Dow Jones Industrial Average. That would be a great example. Here's the tweet that President Trump had put out, and he was just talking about the 10% will go to the 25% on Friday, right? And billions of dollars of goods that could be affected, basically saying that the renegotiation is not going to happen, that they're too slow.
Yeah, so American corporations are huge consumers of inputs from abroad, including Chinese steel, Chinese aluminum.
Right.
And those tariffs are basically taxes on those corporations. So things like Caterpillar, even small manufacturers are going to be seeing increases in the prices of goods, and that's going to lead to less good beneficial economic conditions for them.
Yeah, so what's interesting is that we saw the major averages down today. The best one of the bunch was the Russell 2000, right? A little less exposure, a little less worries there as far as currency exchange, tariff issues, because it's a little more eccentric here in the U.S.
Sure, yeah, it's really the American manufacturers who, right, you know, even when they're making their stuff in the United States, they've got to buy ingredients from all over. In many cases, they've got components from all over, and it's really hammering the American corporations from Ford all the way down.
Yeah, so are you worried now? We got our latest GDP number. We got a great jobs number on Friday. I mean, what a difference a day makes, right? On Friday, everybody was woohoo, all great, best, lowest unemployment in 50 years. And here we are today, spooked by the war that's happening, or the tariff battle. Is it a game of chicken?
Yeah, some people are calling it a counter-cyclical policy where we've got so many things going so well in the economy. You know, record low unemployment in the past 50 years, so many unfilled jobs, and the economy's humming. A lot of people say that's because of the tax decreases, the deregulation. And then at the same time, markets are getting hit with these threats of taxes, tariffs, and so it's tempering, I would say, a lot of otherwise great news in the economy.
Let's get to the Fed. I mean, obviously, last Fed meeting, still more holding pat, patience. Those are the type of language that we're hearing. We also have people who have been suggested for the Fed, Herman Cain and Stephen Moore and Paul Winfrey. What are you thinking about the Fed and how it affects our markets?
Well, you know, it's funny because the president, when he was a candidate, was saying the Fed's too expansionary. They're having artificially low interest rates. That's leading to a false stock market. Now that he's in office, he's like, no, don't raise rates back to their normal levels. We've got to be expansionary. We've got to lower rates. So he's been highly political, highly critical. In recent times, he's been advocating potential nominees who seem to be highly political. So I think it's leading a lot of people to realize that the Fed is not so independent as many people assume.
Right. I mean, and you have Larry Kudlow, who was saying basically if you had these low rates and then you could keep low rates, we can move 3-4% on GDP, right?
Yeah, sure. So Steve Moore, who's not on the table anymore, was a big critic of expansionary monetary policy, overly loose monetary policy. And then when he got involved with Trump, he said, no, wait, this is good. So a lot of these people are actually flipping and saying we need to be lowering interest rates. And the Fed is now kind of caught in this awkward situation.
Mm-hmm. What is the correlation now between what the Fed does and what you think it does and the markets?
Sure. So,
and you have to factor in the China story. So why don't we just put it this way? We have a great economy that's happening. It's still growing, maybe not at the same pace, but where do you think we're going?
So there's just all these factors, including China, including monetary policy. As government is more expansionary with monetary policy, that leads to lower interest rates. People can start financing more, and that actually can fuel markets. Now, a lot of people say that actually can be distortionary.
Right.
When the market price is artificially low to this expansionary policy, that can actually cause problems. So I'm actually, in the long run, quite an optimist, but there's always all of these fluctuations that are being introduced into markets.
I mean, it comes as no surprise to you that some of these are multinationals. 3M, Caterpillar, Apple, Nike are the big losers on the Dow Jones Industrial Average, right? I mean, when you talk about this China story.
Oh, certainly. I mean, it is the American consumer, and the American corporation is actually having to pay for all these potential tariffs, these taxes.
Right.
And it's just going to hammer them. The more we tax those corporations, the worse it's going to be for the shareholder, the investors, and them.
Last question. Art of the deal, or are you worried? Quickly.
My friends are a little bit more optimistic. Oh, it's going to lead to free trade, and I hope that's the case.
Okay, well, hoping is good. We'll make it happen, right? Ed Stringham, President, American Institute for Economic Research. Thank you so much for being on the show. Coming up next.